Hello, welcome to the weekly technical analysis review here at XM.com. I'm Selena Nicholas, technical analyst. Today is Monday, March 6th, and we'll look at some major pairs on the daily chart. We'll start with dollar yen. We can see that USDJPY has been neutral. It's been in a consolidation phase since the end of January. It's capped by the 50-day moving average, and it's been trading above 111.50. The level at 115 has proven to be a strong resistance level, as the pair hasn't been able to close above it for over a month now. USDJPY fell sharply on Friday after touching a high of 114.74. We saw a move back below the 50-day moving average. This rapid pullback has dented the recent upside momentum. So on the downside, we're now targeting support at 111.50, and then move below this would shift the neutral bias to a more bearish one, and only a move above 115 would negate this bearish downside bias. Let's take a look at euro dollar on the daily chart. It's also been in a consolidation phase. It's been neutral since mid-February. It's been pivoting around the 50-day moving average and around the key level 1.06. We'd need to see a move below 1.05 or above 1.07 to see a clearer direction in the pair. Above 1.07 would bring a resumption of the uptrend that started back in January from the low of 1.0339. So prices had reached a high of 1.0828 in January. So if the market can break above 1.07, we could see a resumption of that uptrend. But since mid-February, the market has been struggling below the 50-day moving average and has been unable to close above it. So we could say that the level at 1.06 right now will act as immediate resistance. RSI is dipping back down. It's back below 50, so into bearish territory again. Support would be at 1.05, and a daily close above 1.06 could bring a rebound, though, a rebound higher towards 1.07. Now let's take a look at pound dollar. We're on the daily chart. We can see that pound dollar has turned bearish, especially after breaking below the 50-day moving average. At the beginning of March, we saw a sharp fall, and prices are testing 1.2250 area, 1.2252, and there could be further weakness towards the key level of 1.22, with scope to target the January 16 low of 1.1986. And RSI is supporting the bearish bias right now, but only a move above 1.2570. That was a high in February. This would ease downside pressure if prices could manage to move above this high and towards 1.2705, which was the February 2nd high. Now let's take a look at gold, because we saw gold had quite a decent rally since the December low of 1122.66. We saw the market rise all the way up to 1263.74 last month, but we saw a bit of a pullback. This was an important resistance at the 200-day moving average. We saw the RSI reach overbought levels at 70. So now we're seeing a bit of a pullback in the market. 1220 is an important support level to the downside, and 1200 is another key level. And a break below this would shift the recent bullish market structure. But of course, a break above 1245 and the 200-day moving average, if prices move back above this, we could see a resumption in the uptrend to target the key 1300 level. Thank you so much for watching and have a great day.